Hey guys, welcome to video 6 of the Advanced Training Series. Now, in this video we're going to be looking at how to determine and draw trend lines and also supply and demand areas. Okay, so we'll get into the trend lines first. Now, I've got some some trend lines that we can look at that I've drawn already previously on my Ripple charts, and I'll kind of go over how we draw them to begin with and how we update them and keep them updated to the current current price action and so forth. Now, what we really want to do is the objective of a trend line, as opposed to support and resistance, for example, is to try and find out where price is heading with a trend. So if we're in a bearish market, like a down moving market, we want to try and look for breakouts of that trend and then to notify when we're going to go in that next bullish run. Or we're going to look to see where, for example, Ripple is a coin that you can margin trade. Now you can short Ripple, for example, so you can determine where good shorting opportunities are as well. So in those times of those bearish markets, you can still capitalize on the bearish market by selling coins as well as buying coins when you find new lows and bullish market signals as to when to buy and sell and so forth. So the objective with your trend line stuff is really to combine it together with everything else that you've learnt as well as an extra market signal. So what we want to do is combine as many possibilities together. Trend lines, support and resistance lines, our different market signals like these head and shoulder patterns and so forth, or inverse head and shoulder patterns and that sort of thing, what we've already learnt before. Combine as many of those together to give us the more things that you can combine together, the stronger the trade entry or the stronger the trade is going to be for you, and the higher probability that trade is actually going to work out in your favor. Okay, now to do trend lines, realistically, it's 2 or more touches. Now, I prefer to have a minimum of at least 3 before I will, call that basically a valid trend line, because with two touches on your trend line is not a very strong signal. Okay, so I wouldn't be basing much off that at all. Of course, you need at least 2 points to start the trend line, because you have to have, a starting point and then at least 1 point you're going to touch, and then touch on a third when it happens. So let me just kind of go over what would happen if we, if we didn't know what was happening with price action at the moment. So I'm going to show you this trend line now. So you can see this big orange one here. Now, obviously, this is, this has got many touches on it. So the more touches that you have on your trend, we've got our starting point. We've broken through one touch there. It's kind of like a false breakout, but that, we're not really counting this as much. But down here, you can see you've got one touch, close to another touch. We've got another touch here. We've got a touch here. We've got a touch here. We've got a touch here. So realistically, we've got 1, 2, 3, 4, I won't even count that, 5, 6, 7 points on our trend line. So that's a very strong trend line. Okay, and as you can see, as price is broken down, once we've broken out of that trend line, combined with down here, we've got, as you can see, just to go over sort of some analysis here, we've got a double bottom, forming here from a 4-hour perspective. Okay, we've got a double bottom and we've got a support line. Okay, we've got a support area here. So we've got a double bottom on a support. Okay, and we've also got this trend line coming down as well. Now, once we break out of this bullish reversal sort of pattern stuff, if we even go down to, say, like a 1-hour time frame, for example. Okay, where's that stuff? It's just back here. If we go back to you want to start with your higher time frames, obviously, and work your way down to your lower time frames. So from that was from our 4-hour chart, so we can see a double bottom on the 4-hour chart. On the 1-hour chart, okay, we can see the double bottom still, so that's our 4-hour double bottom that's formed there. And from a 1-hour chart perspective, you can basically see like even a small head and shoulder pattern here, We've got our left shoulder here, we've got our head here, and we've got our right shoulder here, So that's another reversal pattern. So from a 1-hour perspective, we've got, from a higher time frame perspective, we've got, a double bottom on the 4-hour. If we go to even say a daily chart, where is it? If we go to a daily chart, we've got a double bottom on the daily chart. We've got the same double bottom on the 4-hourly chart. Come down to the 1-hourly chart. We've got our inverse head and shoulder pattern, which is another reversal pattern. So we've got pretty strong bullish signals there. We were on a support level, and then as price comes up here, and as we break that trend line as well, okay. So this basically acts as a big triangle now. So we've got our big triangle. Okay, and that means price is going to break out one direction or the other. Price could break down. Price could follow the trend line and continue to break down through this support level. Or once we break out of this trend line and bounce off our support and resistance, our double bottom, our inverse head and shoulders and stuff, we get a massive surge in the market because a lot of other people are seeing these same patterns, guys. So once we get our big breakout, that's when a lot of stuff starts to happen, okay? So we combine all of this sort of stuff together to form our trades. The more that you have, the better. So with your trend line perspective, from just going back to our trend lines alone, okay, to draw trend lines, obviously the trend lines, if you find a good trend line on a higher time frame, a weekly time frame or a daily time frame, 4-hourly, whatever, the trend lines that you get in on those higher time frames are going to be much stronger than, say, a trend line on a 5-minute time frame. So if you're drawing trends on 5-minute time frames, guys, from a longer term perspective, that's not going to weight much at all. Okay, you want to scale down from your higher time frames. So go look at your higher time frames, and trend lines are generally drawn from wick to wicks or bodies to bodies. Okay, so you need to determine which is going to be best based on the trend, and the way you tell that is basically just whichever has the most touches and whichever is the cleanest. Okay, so there's no right or wrong way to do trend lines. You don't always have to go from body to body or wick to wick. Go based upon the trend which gets the most touches and is the cleanest price action. Like if we have a trend line, if I was to draw, if we were to go back, so before I even drew this trend line in, okay, so if we were to look at price here, okay, we don't really know what's happened in the future yet. We don't know what price has happened. Okay, so from a trend line perspective, realistically, I'd be drawing a trend, from here to here. Yeah, that's only one touch. Okay, it's just from our point here to our point there. So I'm not going to put a lot of weight on that trend line because, as you can see, there's no, it doesn't really go anywhere. Okay, and then as price starts to come down, starts to come up again, okay, you move your trend line. Again, it's only got 2 touches. Okay, as it comes up again, as price forms here, price moves to here. We can adjust this to here, but then we're missing this touch as well. So now that price has gotten to this point here, we've still only got 2 touches of our trend line, guys. Okay, as price comes back up, okay, if I was to draw a trend from here to here, and this is why you need to update your trend lines, guys, because I'm going to show you long term. If I didn't change or move my trend line, this green line would be my trend. And I'd be sitting there going, why is price never, where's my trend? What's happening? Where can I sell? Where am I going to be setting my profit levels? What am I going to be doing? There's no touches on this line at all. There's only 2 touches ever on this line. So as we come down here to get our third touch, okay, this trend line alone, once we got to this point here, even this is a cleaner trend line than the top one, because we've got price point to current price. We treat this as a false breakout, okay, and we'll keep our trend here. As we hit this little point in time, okay, so this is what we see at the moment. As we hit this price point in time, that's cool. That's another point on our trend, okay. So now we've got 1, 2, 3 actual real touches. Trend is still intact because we're still making lows, okay, so we're still in the downtrend. As price continues, we see this price point here. That's another touch on our trend line, okay. We see price is still heading down. Price is still heading down. We're still keeping our trend intact, still keeping our trend line, and then this happens, okay. So this happens. So a lot of people will jump on that straight away. That's our breakout candle. Yes, at this point in time, this isn't a bad sort of support level. There's not many touches on it though, so you only have 1 touch here, 1 touch here. This is all consolidation. This is not a support and resistance level here. There's no touch here, okay. You've got a bit of a false breakout and stuff here, but a realistic better level would be down, down around this 9,000 level, because you've got price reacting here, you got price reacting here, price reacting here, and price reacting here, okay. So some people would see that and go, oh, price is accelerating, I'm in. But all they're really looking at is a very short term price level based on this price alone, okay. So I would not have traded that at all. That to me is nothing, even though it's a bullish engulfing, okay, and we know a bullish engulfing is a great reversal pattern. But all you would be combining there is a bullish engulfing and previous support from current price. There's no long-term support there, okay. So we keep moving. Now once we start to form these prices, okay, and this touch, and this touch, and this touch, we need to adjust our trend line. So our trend line now goes from here, okay, we would then drag it up to here because it's a stronger level. We've got more touches and we've got current price action involved as well instead of old price action, okay. So we've now got 1, 2, 3, 4, 5, 6 touches, okay, on our trend line. We keep dragging that along. As you can see, we have more touches here, all the way down, and then we break out, okay. And the other cool thing with trend lines is you can see things like this pattern here, okay. So as our trend is coming down, you can imagine me just dragging this all the way through because that's our current price, okay. Now this trend line here, this orange one, okay, is a trend from back in May, okay. And the reason I've taken this trend line is because that's where our last acceleration explosion move happened from. So I take that low, I then combine it with this price when it happens, okay. Now as you can imagine, that would only be the second touch, so again I wouldn't be putting a lot of emphasis on this. But once this starts to happen here, okay, that gives us our third and more touches. And then as you can see, I've just dragged this trend line out, okay, like that. So when price is coming down and gets to here and gets back to this point, okay, this is our support level turned resistance. So this point in time, this sort of candle here would be a great sell opportunity because we've got an uptrend, okay? We're touching on the back of an uptrend because as we've broken below that, we've come back up to touch previous support back here, and now acting as resistance. We've got our downtrend coming down as well. So we're intersecting between two trend lines, uptrend and a downtrend line, and a resistance line at the moment. Okay, based upon that alone, that's a very good reversal sort of signal. Okay, it's not quite a, as you can see, the wick is quite a lot larger than what the body is, so that indicates that price came up and came back down again. So sellers are taking control of the market, and price continues downwards. So that sort of trade there is a great start to a very strong trend. Obviously we would then go and look at other factors, market depth indicators, everything else we've learned as well with the different EMAs and Bollinger Bands and all sorts of stuff as well. We'd combine all that together to see if that's a good trading opportunity. But that's how you draw your trend lines, guys. So you need to update them and keep them updated. And you want to start putting emphasis on them when you get 3 or more touches, okay? 2 touches obviously has to happen initially because you still need price to go from somewhere to the starting point. But as you start to see the trend become more involved with more touches, where you can draw your trend line to do more touches, okay, move it to those more touches, because more and more people are going to see that trend line interacting with more of those price points. And then that's when you start to combine things with, obviously in this opportunity, this is a very long-term bearish trend line. Now, from a market perspective, you want to combine that with things like, if we go into how to draw, your supply and demand zones now, to give you an idea how to use them combined with everything else as well. Now, realistically, a supply or demand zone is pretty much drawn from the moving there. Pretty much drawn from a candle wick to a candle close. Okay, and that kind of gives you a buffer between not having to use support and resistance level alone. It gives you a bit of a buffer, and depending on which way you're going to go about it, for example, if we were to say so basically you take the wick of the candle. I'll just get rid of this, for example, and to do this tool, sorry guys, just going back there as well, to do the trend line tool, you want to click on this button here and click trend line. To do a trend, you basically just click on a point, you drag your mouse to a point, and then you click to another point. If you want to extend it, you just click and drag either of the circles, and you can drag it to wherever you want to go. Okay, so click, hold, mouse, drag it, and then just let go, and that'll move it. If you want to delete a line, you just click on the line, press delete on your keyboard, that'll get rid of the line. Okay, to do the tool that I use for my supply and demand tools, this button here, okay, and then I use the rectangle. Same thing, you click it and drag it to wherever you want to go, and then you click again. Okay, now what you can use, a supply and demand thing basically goes from a wick, okay, to the body of the candle. So you normally take the low, okay, so if we come down here, you normally take the low of the candle to the body of that same candle, and then that becomes your, if we're looking for buy entries, that becomes our buy zone, and if we're looking for sell entries, that's our sell zone. Okay, so what we'd do is this is Ripple, for example. This is after our most recent high, so I would then draw a box from the bottom, okay, up to the candle, and then just drag it. Basically, just drag it along to the right hand side of your screen. Okay, so if we just keep dragging this across. Okay. So as you can see, guys, that's our low. That's our body of our candle. Okay, so you go from the wick back to the body. Okay. And this is kind of where you want to be setting your buys around. Okay. It's more or less a support or resistance zone, but it gives you an opportunity to get in with better value as well. So you can see price has wicked to there. So you can pretty much put buy orders in between your first support level down to where the candle has previously wicked. Now, you can see you can get in with better entries based upon using this. Okay, so if you were to set buy orders at the very bottom, okay, you would have hit one. You would have hit one buy order there during this whole time frame. If you want to do the scaling approach with multiple buy orders that I talk about, if you were some sort of strategy, if you were to set, say, your first one at a support level, Fibonacci level, etc., if you were to set your second buy order at the next fib level or lower, or within the same supply zone, if you're already at a very low fib level, okay, you can get better buy entries with this. And the reason, the other thing that this is good for using as well is something along the lines of your sell orders. Okay, so if we take our high, for example, to the wick, okay, we'll just drag that along. This is our supply and demand zone. Now, the reason why this is good is a lot of the time, well, not a lot of the time, but some of the time, price doesn't quite get to that round psychological number. As you know, by using the market depth indicator, okay, you can add your supply and demand zones with the market depth indicator to give you the best kind of sell zone or buy zone. And the reason that's important is because if you, like in this circumstance just here, okay, I've got a support level or a resistance level at 5,600. Okay, now as you guys know, I'm not going to set my sell order at a round psychological number, but again, if I only set it a few points below this, okay, this order, if I bought down here, which I did, if I bought down here during the real market, which I have done so, and if I set my sells at only this level here at 5,600 or like 50, 55, 97 or something like that, just before any sell walls at that level, I may not hit my target. Okay, so what this supply and demand zone allows you to do is it gives you more of a buffer to set your sells and buys at. Okay, so you can take this approach. The market depth alone, again, guys, you need to combine this with everything else as well. Don't put all of your emphasis just on one thing that you learned during the course. You need to combine it all together. So the market depth indicator is realistically, it's almost like a cheat sheet supply and demand zone, because as you guys know, a lot of the market depth walls are going to be around those round psychological numbers, which act as dynamic support and resistance. Okay, and this just emphasizes on another addition to which is going to be best. Like if you drew this supply and demand zone, okay, and you saw, you go, okay, cool, there's my resistance level. We're looking for price to get, to or very close to that resistance level. And then if you look at the market depth, if you draw this in and you go, oh, okay, well, realistically, prices wick between here and here, and you go, okay, realistically, I can sell off at about 5,500 as well. Okay, and then you go and look at the market depth indicator, and there's a big wall at 5,500. You can then place your sell just below that point, and then price has got a much better chance to get to that price point. You know what I mean? So combine using your support and resistance levels with the supply and demand zone levels and the market depth indicator, okay, to get your best buy and sell entry criteria there. Okay, so don't just use the market depth indicator, or don't just use support and resistance. Don't just use this supply and demand zone thing. You need to combine them together to find out which is going to be the best opportunity for price to get to that point. Okay, so you want to combine all of your knowledge, all the learning that you've been doing together to give you guys the best opportunity. And that's really the only difference between the advanced stuff that you need to learn and the beginner stuff. The beginner stuff touches on the basic fundamentals of how to get all your buy and support levels and so forth, okay? And the advanced stuff really goes into combining all of the basic stuff you learn plus the advanced stuff to give you guys the best opportunity to get the best pricing, but then also the highest percentage chance to hit price on that level as well. So, as you could imagine, if you hit this sell order, okay, you've got another opportunity to then buy back in with more capital and roll that over, or use it on another coin. And then the time frame between buying here and selling here, or waiting till here, what's that? That's about a month or 3 weeks time frame. Okay, so by combining more and more of the knowledge that you're learning, guys, you're going to hit more and more buy orders in better locations, and you're going to hit more sell orders in better locations as well once you combine all of the knowledge together. So that's how to do your trend lines, guys, and that's how to do your supply and demand zones. In the next video, we'll be touching on a little bit more with we'll be touching on which indicators to use. Okay, so again, combining more and more knowledge, okay, and adding more and more together. So thanks for tuning in. I hope you guys enjoyed this video. Any questions, obviously, shoot me a PM.